Hi there, traders. This is Brad Gilbert with the FX Market Insight for the 12th of September. All right, it's a little bit of Groundhog Day, if anything. There hasn't been a lot going on, and I mentioned this on Monday, a little bit more on Tuesday, but the main start of the week, or the main data, starts to come from pretty much Thursday onwards, or even the PPI data, I think it is, in the US session today, and then onwards. This is where the week really starts. So the currencies have just been sort of jamming away. Aussie and Kiwi still on that sort of slow trajectory to the downside. I just seem to be missing that Aussie top by 5 to 8 points here and there. It's just been a little bit frustrating. But once again, there's the geopolitical events are still simmering away, and we are seeing a little bit of life in dollar yen. But overall, it's just been trading in a big range. So I wouldn't be surprised to see this dip back down and start trading sideways. Euro definitely heading sideways into the ECB meeting. There's not a hell of a lot going on. If anything, it is getting a little bit of support from its correlating cousin there, the sterling. Now, sterling, if you have been away from the screens, has been enjoying really been the major beneficiary, I should say, of really positive Brexit talks or rumours, news, whatever you want to call it. There's so much crap out there, but the idea is the EU are going to come and work out a plan with the UK over the next 6 to 8 weeks, okay, at least a couple of months. I mean, that takes us to Christmas, so they've got till March. But the euphoria of that has been somewhat diminished. Now, let me actually, the easiest thing to do here is actually just go into sterling itself. Let me just clear the screen. Just come into the sterling chart. You can have a look. We've just gone through a major technical level on the top side, and it's I think this is just mainly a flush out of old stale positions. I mean, Brexit has been dominating the downside for some time, and we saw it move from, I guess you could say up around 143, but where it started to really kick in around 137, and then it's just been sort of one-way traffic. Now it's started to trade sideways. There's been a lot of residual stops above this resistance line. You can see they've been taken out, almost racing up to 131. It's a pretty sure sign that you're getting close to a high when it hits a level and bounces and drops at 150 points almost straight away. All right, so maybe this is a short-term top. To me, the technicals are all supporting a move to the top side. To me also, we've got the Bank of England on Thursday, tomorrow. So inflation's still very high. I know rates are expected to be on hold in the UK, but they could surprise there. And if they don't, it will be potentially a hawkish tone. So I still think the top side is the way to go, even though all the price action here on sterling is all geopolitical, which makes it extremely tough to trade. Now, with that break of this resistance line, as you can see, there's no real levels here until you get up to 140. That's like almost 10 cents. So we are starting to revert back towards the Fibonacci levels, as you can see here, 133.16, 38.2%, 135.18, etc. So they're your basic levels, and that's when trading gets really loose. So we need Brexit to be a little bit out of the way to sort of work out what's going on. But now that we've got that fresh high and it's pulled back into the range, you can be very confident and comfortable to raise that resistance line. So we do have a new level there on the top side to potentially target for an entry should we see sterling racing a bit more to the top side. All right, so that's sterling, right? It's not an easy trade. You may look at this each day and go, oh, I should have got long, I should have got short. Sterling is a bit of a bloodbath, so don't get yourself all bent out of shape if you are missing a lot of these moves. I bought some yesterday, actually, after the UK employment numbers, and because it was in the middle of nowhere, I just squared it up. Okay, pretty much as at the same level I bought it, and then sort of walked away from the screens. But then no later than less than an hour, it was almost 100 points lower, and then started banging away in the range. I was pretty happy with that outcome to square up the position, even though it looked like it should keep going to the top side. Dollar CAD, a little bit of a clean out to the downside. We did have some housing numbers which were just a little bit skew-if, only a little bit weaker. Okay, but this is all a dollar move, and it's all based around NAFTA. So when you are looking at the major currency pairs, we've got you've got to understand what's going on now. Sterling, okay, Brexit is the main thing. CAD, NAFTA, And then you've got all the other major pairs, well, Aussie and Kiwi. These are all the US-China situations. So that's why dollar yen and euro are pretty much sitting there, because they're not really impacted directly by these geopolitical events. Dollar yen is like a bit of a safe haven play. That's all it is. And euro just tuning sideways, wondering what's going on. So there's a bunch of these major currency pairs that are impacted directly from these geopolitical events, and there's some that aren't. That's why we're seeing the general correlations completely discombobulated. Now, let's just have a look at the US dollar here. Now, as you can see, like just with yesterday's trading, it's trading sideways, but you can see how the market's trying to push these trend lines. And once again, just enough to try and push it through the downside, failed, and it bounces back into the range. Dollar one, okay, still slowly rallying to the top side. Now, the Chinese were talking about doing whatever they can. I think it was yesterday or the day before, about covering any black swan events. I mean, that's just insanity, saying that they're going to do whatever it takes. That means devaluing the arse out of their currency. I think that's fair play. I think they'll find a lot of international plays jumping up and down if that's the case. So what we've got is the US dollar. Once again, we've got the US dollar just trading sideways. Don't forget, we've had hardly any major data yet. We've got the Bank of England. We've got the ECB. We've got the US CPI, US retail sales. We've got a heap of stuff coming out. So don't get yourself all bent out of shape if you haven't really hit the button yet or hit it out of the park. Right? When we look at the upcoming data and the market profile in the MyFX Trading Hub, once again, this is a real test of patience. The geopolitical situation that's dominating the market. This is, it's just one of those things you just got to go with. I mean, it's unusual that the geopolitical events last this long, but that's the extent of what Trump has built at this stage. Now, the next major event, upcoming event, okay, it's 13 hours away. Okay, we've got the US PPI numbers. The first real lead into some inflation numbers in the US, that is the start of the week, okay? For me, it's like the start of the week it's been like just a drag at the moment, and we are seeing the currency sort of gyrate. Sterling's whipping around all over the place on geopolitical news. Same with a bit of dollar CAD. Now the week really starts, and this is where you've got to start to focus and forget about what's happened so far and really drill into the core events. US PPI, and then, as I said, Thursday it really kicks in. Aussie employment numbers, the Bank of England, ECB, US CPI. Don't forget the ECB press conference, and then you've got the following day, Kiwi Business Manufacturing Index, China industrial production down the bottom there, US retail sales. So there's plenty going on, and when you look at the overall framework of what's going on the major currencies themselves, there's been no change, okay? Most of these currencies, there's a little bit of noise on the hourly charts. Don't get sucked into that. These things are just trading sideways. Aussie and Kiwi still have a bearish perspective. You can't deny at this point, sterling is still got a bullish, to me, sentiment. Now, a lot of this has been driven, the technical side's been driven by the geopolitical side, but still it's there, right? So to me, there's a chance for sterling to keep going up. But which is, these currency pairs up here, the four at the top here, generally correlate. At the moment, they are out of whack. Aussie and Kiwi, the two geographical sort of cousins, they are working in tandem. They have a different economic perspective than the other currencies as well. So just be aware of that. As I mentioned before, I've had a technical trading play here on the Aussie for the last couple of days. It has been so close to getting kicked in. I'm only sort of missing 30 or 40 points here and there, but it's just one of those ones that can annoy you. So don't let, if you've had positions in the market or orders in the market, you haven't been set, don't lose control and just jump in. Wait for the good trading opportunities, and that's where your professional approach will really count at the end of the day. So then you come through, look at the overall big calendar. Okay, I've just showed you the MyFX Trading Hub, the high impacting events that we're focusing on. Have a look here. There's a whole range of really low impacting data. The PPI data, it's an inflation number, so keep an eye on it, but it's not absolutely massive. So really, this next 24 hours is going to be a test of patience. If anything, if you see a good opportunity, and this is where, once again, you focus on the pairs that do have clear sentiment. I'm more in favour of the Aussie and Kiwi because of the geopolitical situation impacting sterling. But if you see a good situation, then potentially look for a technical trade as we wait pretty much almost 24 hours for the real week to start. And that starts with the Aussie employment figures tomorrow. All right, so there's not much we can do about that. If you are trading and looking for opportunities during the Asian session, well then you should know by now that the major impact here is dollar one. Okay, it's slowly moving to the top side. Just change that. So it is trading technically just like the other majors, but the moves are somewhat random. The equity markets, once again, there's no major change in anything there. If you hit a raw nerve, whether it's dollar one or the US dollar or anything, you can generally see it impact these markets. Now, even the Chinese equity markets, pretty neutral yesterday. They have been getting hit by 1% in the last few days, and then all of a sudden, nothing. So I don't expect much impact there. The media outlets have gone very quiet on the US yield curve. It has steepened again up to 3.123. So that tells me that there's no recession coming in the US, which was, once again, another storm in the teacup. If you're looking at the correlations with the dollar one, once again, it's really up the top here. You're getting Kiwi back into the 60% range. So 62%, almost 65% for the Aussie. That's the correlation with the Chinese yuan. If I just scroll down there, you'll see the Dow Jones, still the standout here, the highest correlation with the yuan, 76%. Okay, so whatever happens to the yuan, you're going to see pretty much replicated in the Dow Jones. And at this point, the Dow Jones pretty neutral. So we'll see how that plays out as we go forward from here. And that's pretty much it, guys. Don't get yourself bent out of shape, as I said. Keep an eye on the prize. Keep your eye on the technical levels. That's what I'll be doing at this stage, is actually trying to assess what's going on. And that's what I was going to say. Like, basically, I've been following this Aussie all week. It's probably one of those ones where, as it gets closer towards trading tomorrow, we will be reassessing and looking for some more tradable opportunities around the releases of those events, as well as the technicals. It's a pretty good setup coming into the week. Don't forget, you hit Thursday, Friday, you've got 48 hours at least to really rip the eyes out of the market. So we've got plenty of time yet to make some cash. All right, guys, that's it from me. Any questions, you can ask me questions in the live trade zone. Have a good trade day, and we'll see you later on. Cheerio.